Pantheon AI presents U.S.-China deal boosts, chip stocks, Nasdaq rally, big tech, and crypto moves. Good morning, everyone. Welcome back to the PAI Morning Briefing. I'm John, your host from Pantheon AI, and today is July 3rd, 2025. Hope you're all ready to dive deep into what's really moving the financial landscape.
And I'm Sarah. Absolutely, John. It feels like there's so much to unpack, doesn't it? From the major stock indexes to crypto, and then all these substantial news stories that are just making waves globally and right here at home.
It really does. So let's kick things off with a quick market overview, shall we? In the equity space, the S&P 500 is trading strong at about 6,282.22, marking an increase of around 0.57%.
Nice. And how's the Dow looking?
The Dow Jones is sitting strong at around 44,839, with a gain of approximately 0.61%. And the Nasdaq's also up, hitting nearly 20,615. That's an increase of roughly 0.57% as well.
Wow. Pretty consistent gains across the board there. What about the Russell 2000?
The Russell 2000 index is trading at around 2,245, up by almost 0.59%. So, a pretty positive picture for equities this morning.
That's good to hear. And shifting gears to crypto? Any big moves there?
Bitcoin showing some resilience, sitting at about $109,298, up by just about 0.41%. And Ethereum's at around $2,574, with a modest uptick of about 0.16%.
So it sounds like no matter where you look in the market today, there's definitely a, quote, token of optimism bubbling through. That's a great start to the day.
Couldn't agree more, Sarah. And as we move deeper into these market trends, what I find especially fascinating is this convergence of various factors shaping our financial landscape right now.
Oh, definitely. I mean, investment sentiment seems to be really buoyed by a few key drivers, right? We're talking robust corporate earnings, a surprisingly resilient labor market, and then these significant macroeconomic events unfolding.
Exactly. And one critical highlight today, which we absolutely have to talk about, is the uptick we're seeing in chip design software stocks. Companies like Siemens, Synopsys, and Cadence are experiencing a notable climb.
Right, and that's all following that pivotal U.S.-China trade deal, isn't it? The removal of those export controls that were really restricting sales and operations in China. That's huge.
It is, and it's not just a blip either. This is looking like a sustainable driver for growth in the semiconductor and chip design sectors, which is really exciting.
That's fantastic. And on another front, the labor market is also showing signs of strength. We just got that jobs report highlighting 147,000 new hires in June. Now, that might seem moderate compared to some past headlines, but it's got significant implications, doesn't it?
It absolutely does. That uptick suggests that despite headwinds like trade disputes and immigration slowdowns, businesses still have considerable confidence to expand and invest in human capital. And this jobs data is a big part of why the Federal Reserve isn't feeling too pressured to cut interest rates in the near term.
So they're weighing that labor market resilience against tempering inflationary pressures. That makes sense. And what about the service sector? I've been hearing a lot about its rebound.
Yes, that's another major story echoing throughout the news today. The service sector, which has been the backbone of the U.S. economy for decades, saw a welcome, albeit cautious, rebound in June after a period of stagnation due to trade uncertainties.
So it's positive, but we shouldn't get too carried away with optimism just yet, right? There are still underlying issues from those earlier trade tensions.
Precisely. It's a reminder that the American economy is resilient, but it's still contending with complex challenges. Now, to really weave these broader narratives together, I'm going to unpack around 10 major themes shaping today's market sentiment.
Ooh, 10 themes. Lay it on us, John. What's the first big one?
Well, our first big story actually circles back to the chip design software space. These articles are just appearing repeatedly in our feeds, and it's been a major conversation starter. Siemens, Synopsys, Cadence, all benefiting from the lifting of those export controls on China.
Yeah, it's like a life raft thrown into turbulent trade seas, isn't it? Allowing these companies to really expand their operations again. Investors must be thrilled about the potential for increased revenues.
They really are. It makes you wonder how quickly we'll see further technical innovations. And, as humorous as it might sound, could those chip designs start planning their own chipset parties once they get free rein in China?
Laughs. I love that image. And closely related to that, what's our second story?
That's our labor market report. With 147,000 new hires in June, it's a testament to a resilient, though slowly shifting, employment landscape. Businesses are being cautious, obviously, weighing trade uncertainties, but these numbers are promising.
And there's that healthy debate about whether this pace of hiring is enough to drive consumer sentiment and economic growth, especially with inflation still lurking. I heard someone joke, it's like that friend who never shows up to the party but turns up for the after party, always reliable when you need them most.
That's a great analogy. Next up, the U.S. service sector. The narrative across news outlets highlights a significant rebound, but with an underlying fragility we can't ignore. Trade war blues cast a long shadow, but momentum's building.
So it's telling a story of rebound and recovery, even if it's still considered somewhat weak overall. And investors are really watching this space, right? Because the service industry is often a bellwether for broader economic health.
Absolutely. Now, our fourth headline of note comes from biotech and healthcare. Theratechnologies is set to be acquired by CB Biotechnology in a striking deal valued at around $254 million.
Oh, interesting. That sounds like a big consolidation move in biotech. Are we seeing a trend there?
Definitely. It reflects an underlying trend of consolidation, leveraging combined research, streamlining operations. It could be a catalyst for even more such deals.
Fascinating. What's the fifth major headline?
The fifth is Olo, in the spotlight as it's set to be acquired by Thoma Bravo in an approximate $2 billion cash deal. This has already lifted Olo's share price by about 12%.
Wow, a 12% jump. That really underscores the market's favorable view, and it signals confidence in the broader tech and software sectors, doesn't it? Especially in omni-channel commerce.
It does. This consolidation could pave the way for more strategic acquisitions in the future. Now, at this point, we can't ignore the repeated emphasis on the chip design software stock story.
You're right, it keeps coming up. It really feels like the headline of the week, honestly.
It does. With multiple rounds of coverage, the message is clear. Regulatory changes on both sides of the Pacific are shifting the dynamics of innovation. Companies can potentially innovate more freely now. It makes you wonder if soon we might see chip designs that can literally perform the tango, free of old restrictions. Just a bit of market humor there.
Laughs. I love that. And bringing it back to the labor market, that growth narrative also sent ripples through both the stock and bond markets, didn't it? Investors are recalibrating their risk models.
Yes, and it's interesting because these figures are a bit of a double-edged sword. Robust hiring is a sign of economic vitality. But on the other hand, it diminishes the prospect of any near-term interest rate cuts by the Federal Reserve.
So for those watching macroeconomic trends, it creates a scenario where positive sentiment is tempered by policy uncertainty. It's a hot debate. Will the Fed stay on its path, or will these robust hires convince them to ease off? Classic economic yin and yang.
Precisely. And moving beyond our domestic borders, another important story emerges about global market implications. That lifting of export controls on chip design software stocks has repercussions far beyond the U.S.
Oh, definitely. China, being a massive tech manufacturing hub, stands to benefit immensely, which could really spur activity in Asian equity markets. And improved U.S.-China relations could ease tensions in other sectors too, leading to a more synchronized global recovery.
Exactly. We'll have to monitor this closely. When one part of the world catches some economic wind, it often sets off a chain reaction for the rest of the globe. Furthermore, the market's really buzzing with chatter on consolidation as a theme.
Right, with acquisitions like Theratechnologies and Olo taking center stage, we're seeing a clear trend of larger players absorbing smaller, specialized companies.
It's not just about appetite for scale. It suggests a real shift in strategic priorities. Companies are leveraging mergers to capture synergies, cut costs, and solidify market positions. It's a fascinating time to observe this confluence of tech, healthcare, and finance in the acquisition arena.
Absolutely. Now, let's transition into a more detailed sector analysis. On the technology front, the mood certainly feels upbeat.
Oh, it is. With the easing of export restrictions affecting chip design firms, there's renewed optimism for future growth and a likely surge in R&D investments. Siemens, Synopsys, Cadence. They're not just innovators. They're stepping into a more favorable regulatory environment.
And considering that innovation in chip tech is so linked to advancements in AI, autonomous vehicles, even renewable energy, this could have a lasting impact across so many sectors. The tech sector always feels like a roller coaster ride, doesn't it? Thrilling, unpredictable, and full of turns.
It truly does. Now, in the energy sector, while there isn't a headline story directly tied to new developments today, the broader implications of global economic recovery have led to cautious optimism among energy investors.
So with increased industrial activity and that service sector rebound, Energy demand is projected to tick upwards gradually. Analysts are watching the interplay between higher oil prices from geopolitical tensions and the push for greener energy solutions.
It's a dynamic balancing act. While there might be some volatility, the long-term trajectory for energy remains steady. It's like that dependable friend who always shows up, even if they occasionally need a little help getting there.
Laughs. I like that. Turning to the finance sector, how are market participants monitoring these macroeconomic developments, robust hiring, market gains, acquisition activity, and their influence on bank earnings?
They're watching closely. With interest rates remaining relatively static on the horizon, there's an expectation that financial institutions will continue to see steady, if not robust, earnings growth. But they also face navigating potential regulatory shifts and international market pressures.
It raises that quintessential question for finance, doesn't it? How will banks strike the balance between risk and reward in such an interconnected world? It's a delicate dance.
It really is. And global markets aren't standing still either. In Europe, Asia, and beyond, investors are keenly attuned to these changes, with the chip design, software narrative, and consolidation trends playing significant roles.
European tech firms, for example, are watching these developments with the keen interest of someone spotting a rare investment opportunity. And in Asia, this easing of export controls is seen as a signal to re-engage with U.S. firms under more favorable terms,
which could lead to increased cross-border investments. Global trade dynamics are notoriously complex, and even a slight shift can set off a cascade of movements. The big question is, can this momentum be sustained, or will it fizzle out?
That's the million-dollar question, isn't it? And of course, no morning briefing is complete without some expert insights and predictions.
Right. A recurring sentiment among leading economists is that while the market shows strength, caution is needed. Robust hiring and service sector rebounds are encouraging, but structural issues like persistent trade tensions and regulatory changes remain.
So they're predicting a cautious yet hopeful medium-term outlook for equities, with tech and healthcare likely being the standouts. I heard one analyst humorously say the market right now is like a cat, cautiously eyeing a laser pointer, ready to pounce but wary of unexpected twists.
Laughs. That's a perfect analogy. So what do all these developments mean for our astute listeners? Sarah, what are your thoughts?
Well, for one, that evolving regulatory environment in the chip design space presents both opportunities and risks. Easing export controls might spark innovation, but traditional competitive advantages could shift rapidly. And the labor market's resilience offers hope for sustained growth. But it also suggests the Fed might maintain its current stance on interest rates longer than we'd hoped.
And in the world of acquisitions, those big fish swallowing the small ones, that trend demands careful analysis if you're considering entry or exit points in your portfolio. It's a market filled with contrasts, significant gains shadowed by uncertainties, bold moves balanced by cautious optimism.
Definitely. And let's not forget to explore some broader questions for our listeners to think about. How will the easing of geopolitical tensions in technology markets impact your portfolio long-term?
Good point. Could these strategic acquisitions in tech and healthcare set the stage for a more consolidated market, altering competitive dynamics across sectors? And what about the implications of a resilient jobs market? Are we looking at a scenario where the Fed remains on hold, or might unexpected shifts force their hand sooner?
Those are really thought-provoking issues that underscore the complexities of our current financial landscape. So before we wrap up, let's bring it all together with a summary of key takeaways.
Sounds good. First, the major U.S. stock indexes, S&P 500, Dow, Nasdaq, Russell 2000, are all showing modest gains supported by positive trends. Cryptocurrencies like Bitcoin and Ethereum, while showing slight improvements, maintain their role as important alternative assets.
Second, the chip design software story, fueled by the removal of export controls on China, remains a focal point for market observers, promising potential growth and innovative breakthroughs. Third, the labor market report and the rebound of the service sector provide critical insights into economic resilience, balancing caution with optimism.
And finally, those strategic acquisitions unfolding from Theratechnologies to Olo spotlight a market ripe for consolidation and transformation, inviting investors to look at these moves from both a risk management and a growth perspective.
And looking on the horizon, the global implications of these trends could be profound. As U.S. policymakers adjust, International markets are likely to experience ripple effects that could redefine cross-border investment strategies.
Absolutely. As technology, energy, and financial sectors evolve in tandem, there's a clear opportunity for investors to recalibrate their approaches, positioning themselves to capture emerging growth while mitigating potential risks.
Before we sign off, I'd like to leave you with a couple of humorous yet reflective thoughts. They say money makes the world go round, but sometimes it feels like it's spinning wildly like a top on a merry-go-round.
Laughs. It really does. When you consider the twists and turns of these market moves, it's almost as if the financial markets are laughing along with us, urging us to keep our wits about us even as we chase those elusive gains.
And isn't that what investing is all about? Balancing seriousness with a touch of humor, knowing that every challenge spurs both innovation and opportunity.
Couldn't have said it better, Sarah. As always, we appreciate you tuning in today. Remember, Pantheon AI is here as your trusty information co-pilot, guiding you through the ever-evolving landscape of finance and market trends. I encourage you to reflect on today's highlights and ask yourself, what does this evolving environment mean for the way you manage risk in your portfolio? And how might the strategic shifts we're witnessing today pave the way for tomorrow's opportunities?
Your questions and perspectives are what make these discussions so enriching. Thank you for joining us on this comprehensive journey through today's market developments. Keep your eyes on the broader picture as well as the finer details. Each piece of news is a part of the larger puzzle that is our global economy.
Indeed. We invite you to come back tomorrow for another in-depth episode of the PAI Morning Briefing. And if you ever have questions or need further insight, remember you can always ask questions to our AI co-pilot. After all, learning shouldn't feel like a full-time job.
Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.